Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun going over some options data. And so this video is going to be kind of a new video, a new style for the channel. And yeah, I'm just going to kind of break it down here with a little introduction. And then I will include timestamps to all of the tickers that are listed over there. But yeah, I'm just going to kind of go over this. And a lot of this video is going to be spent in Excel, which might be kind of lame, but, this is really useful for me in getting more familiar with options, learning how to use certain tools that are out there, and learning how to utilize the data to make successful trades. And so I'm just going to be breaking down my thesis for all of these, and it should be some fun, but it may also be a little bit dull. But this is just really me hanging out doing this because I need to be doing it for myself, and I thought I'd record it and share it with you guys. And so yeah, I'm just going to kind of break this down with a little bit of an introduction. And so from the spreadsheet, all of these options that are over here. So I began documenting an AMC option thesis that I have. It hasn't played out yet, but I have been putting out weekly videos on that. I'm probably going to change that to be this. So I'll do this every week. That will include AMC, the call that I have been going over, as well as these other tickers, and others will be added to it. Some of them will be removed as these trades progress. And, so this all started with this call here. So that is the AMC $8 strike with the expiration of June 20th. And, also started, with me accumulating this call, the NEO $8 strike, also with the June 20th expiration. Coincidentally, they both have the same strike price of $8. They're both calls, and they expire at the exact same time. But yeah, I just kind of started building up a thesis on those two stocks, these other ones as well. And I have just been not necessarily paying attention to the data too much, but that's really where this video comes in. And the Excel, because I have been using Unusual Whales for the past, I believe, 3 months. It's a monthly subscription. It's $48 a month, or at least it's now $50 a month. I think they did have a Halloween sale that it was a little bit cheaper. But not to get in anything personal. It's just financially a little bit tight until my next paycheck, and tied upness is because I just paid off some credit card debt. So, I'm excited about that. I'm excited about the chains that have been broken, but, I'm just a little bit tight. And so because of that, I cannot utilize Unusual Whales. And so I just started kind of compiling data from Unusual Whales that I will be adding on a daily basis to these spreadsheets. If I can't access the data from Unusual Whales, I'll just be doing it from the options table, and it'll be a little bit more like restricted than what you would get from Unusual Whales. But for me, from what I've experienced the past few months, Unusual Whales is a great value, but it's just like so much. I kind of feel like a deer in headlights with all of that data. And so I think this will actually be a really good step for me in getting more familiar with options, just kind of, trimming the fat, getting used to a more limited amount of data, seeing how I can utilize that to make better, more informed trades. And and then once I get more familiar with this data, then maybe it will be more useful for me to get Unusual Whales back to either add to this type of analysis, like in Excel, or to just focus completely on Unusual Whales. But yeah, so that's why I'm doing this, because I was holding all of these calls, or most of them, and just thinking, well, I'm not going to have this Unusual Whales data anymore. I should compile what I think is useful into Excel. And so I'll just be going over that with you guys here. And, I say it at the beginning of every video, but especially with this, talking about options, talking about trades that I am involved in, none of this is financial advice. This is for educational purposes only, and especially for having fun, because that's what this channel is all about. And so by educational purposes, I don't necessarily mean that you may learn by good example. I'm saying that this is me documenting my learning process. Hopefully I can make some money with this, and hopefully that can serve as a good example. But I'm sure that some of these trades, if not most of them, will be bad. So take all of this with a grain of salt. This is literally me just having fun doing this and trying to get involved into the data more, being more accountable for the trades. And that's really, what this channel is always, it has always been about, is really just been like a trading journal for myself. And, I talk about technical analysis, trying to time and call bottoms, tops, whatever. And, with that, I'm not always right. I'd say oftentimes I'm wrong. But with this, diving into the data, I think I can make more informed trades. And so I'm just really excited about that, wanted to be documenting that. But, I know that most of you are probably not interested in all of these tickers. So I will be adding timestamps kind of grouped like this. So AMC will all be together, Lucid will be together, and so on. And so hopefully that should be easily accessible for you guys. And also I forgot to note the red text. Some or most of these will be bad. I do think that these two calls at the bottom that are in red could be losing trades. I'm not really sure. I'll get into why I think that. But otherwise, I do think that these will be good trades. But, who knows? I could be wrong. And one thing to note is that these are all calls. I'm not buying puts on any of these, which, perhaps is a bad idea. But really, my thesis with that is that looking at the charts, I think that the stock prices should go up prior to expiration, which is well into the future for most of these. And also, with it being the start of November, I view that we might be getting, I suspect we will be getting a Santa Claus rally. And so I think that going long is kind of the way to be right now. I think it's going against the trend if not doing that. And so, I'm just going to be going over the data that I've compiled. I might be adjusting some of it as I go through, and I will be adding references, kind of like my DD in how I put this together. And also I have to give a shout out to, I don't know if you guys are familiar with Richard Newton, who does like basically daily videos on GameStop. And so my idea for doing this kind of video really came about by just like pretty much every morning, whether I'm at work or, at home, I tend to tune into Richard Newton spending about half an hour talking about GameStop and, him diving into really like spreadsheets, the charts, whatever, just talking about GameStop, his thesis. And he usually does that over a cup of coffee. And so, I thought that, it doesn't happen to be the morning right now. It's Saturday evening for me. And so I've got a different kind of beverage here. And so, as I go through this, whether you're watching it in the evening, whether you're watching it in the day, grab a beverage, enjoy yourself, maybe grab some food. Hopefully we can learn together and just diving into this stuff. And with this, zap that I have here, the link, Richard Newton, I believe that he has like a Google Docs spreadsheet of all the information that he goes over. And so that is something that I could do for these weekly, options videos. So let me know in the comments if you want me to do that. I can create a Google Doc that you would all have access to the links and whatnot, my DD that I post into them. And, that I will be updating daily. So that might be a nice way for you guys to have access to view this stuff, even if I'm not making videos. And so we can just be learning in a more active way rather than just kind of passively on a weekly basis. But anyways, with all of that being said, I am going to be jumping into the tickers that are listed on the left. And I'll probably, before I get into them, the first one that I'll be going over is AMC. I will be breaking down kind of the format, so it might be useful to stick around for the beginning of that before jumping ahead to the timestamp of the stock that you're interested in. But yeah, this is all formatted the same, and I think it should be useful no matter what stock you're interested in, or if you're just trying to get more familiar with options. I think this will be, a really good resource, if not just for me, hopefully for you guys as well. And, with all of that being said, since it is the evening, cheers. Happy Saturday, November 2nd. We've got daylight savings time falling back. And, I'm really not looking forward to that. But, I'm really excited about doing this. I'm going to try to do it on a weekly basis. And it's going to be very casual, unedited, like the ticker request lives that I do on Sundays at 9 p.m. Eastern. And so, if you do enjoy those, I think you will enjoy these and vice versa. And yeah, let's just casually get into some data and enjoy ourselves because this is fun, learning, having an edge, getting an edge on the markets. But anyways, cheers to you guys. And I contemplated leaving that in the can because I'd get it in the mustache if I put it in the glass, but whatever. But anyways, yeah, let's dive into the data. All right, and so the first one that I'm going to go over is the AMC call with the $8 strike that is expiring January 17th. This is how I'm going to have all of the data formatted for the different tickers. And so what I have here, this is the average buy price. This is data that I got from Unusual Whales down here. The reason why I have this as low/bid, high/ask, average/mid is because I get the daily lowest bid price or trade for these options. I get the highest for the day and also the average from Unusual Whales. If I no longer have access to that data since Unusual Whales has expired, I will be doing the bid, ask, and mid based on the close for the day for any of these options. And so with all of this data down here, what I do have is the date. I go back as far as the beginning of September. Some of them don't have data going back that far. And so I just try to compile it from the past couple months. And I transfer this data from Unusual Whales by taking screenshots, copying the text, putting it in here. And so all of the data should be correct, but I of course may be making some mistakes, so do take it with a grain of salt. Anyways, here we've got the volume, then we've got the open interest, and then the change between the previous day and the current day in the open interest. And so that is just calculated up here. You can see it's just the difference between those, and that's the same data that you get from Unusual Whales. I just have the math done here. Then I have the the lowest price for the day, the lowest price or the highest price for the premium for the day, and then the average. Here is the implied volatility, or IV. I am probably actually going to change this total premium chart in these to IV because I just think that will add more information. So I'll go over kind of a justification for that. And then I do have the total premium here, which I do think does tell a lot of good information. But I do think that's kind of reflected in other areas as well, as some of the graphs above here do look fairly similar. And I also do have my positions that I'm accumulating as I we'll be working through these on a weekly basis. And so this contract is one that I really just kind of learned about, and I decided to get one. I put $20 on the line for it, have one contract, 20 cents times 100 shares, $20. And for this one, I plan on just doing it for a 20% swing. Others I plan on doing for more than that and less than that. But this one is, the reason why I'm doing this shorter or only 20% rather than 100% or like a 2x is because it expires in January 17th of 2025. So that's coming up. And so this is a shorter dated contract, and so I got to be a little bit cautious with it. But anyways, what we can see here in the blue up here, this is the average or the mid, so from this column here. And so we can see that the premium price for these contracts has been coming down. I just got one, that's at 20 cents. You can see that there in orange. And so, that's some data that I think will be useful for these. Then over here, I have the volume in blue, so just coming from this column over here, and then the open interest in orange, so coming from this column over here. And so the, let's see, the left axis corresponds with the volume, the right axis corresponds with the open interest. And so what we can see from this, and what I like about this data here, is that we see a spike in the volume over here, and corresponding with that, we see an increase in the open interest, and open interest has more or less stayed flat. It's actually gone up since that big spike. And so that tells me that whoever bought calls here, they're holding them. They didn't dump them. And so if I do see, this open interest drop off when there's another spike in volume, then that would tell me, well, maybe I should be getting out of this position, even if it's at a loss. But at this point, since this goes back to, let's see, that date was the end of September. That corresponds with, right around here. And so their average fill would have been, above 35 cents. I bought at 20 cents. So that makes me feel pretty good about that. But, this is AMC, so it could be very retail, not whale heavy. Although if we do look at the total premium, which does look like a very similar graph as the volume, we can see that the total premium spiked up to 180,000 on that day, so on September 20th. And so that makes me think, that's a lot of money. It's more than just $10,000, which is one YOLO. And so, that's, a pretty big position. And that's probably divided up against a number of people. And so, I think that, stands out to me. But because this is short dated, January 17th, just, 2.5 months away, I'll take just a 20% swing. I'm sure that this will go up 100%. So like from 20 cents up to 40 cents, that actually definitely seems feasible. So maybe I want to adjust this. But right now, I do believe I have a limit sell at 24 cents. So that's making 20%. Nothing crazy, but just getting, practice with options, looking at this data. And so one thing that I was thinking about doing that might add a little bit more to, the interpretation of these, I was thinking about changing this data from total premium to implied volatility. And maybe I actually just want to do that by moving this over. And so we can see that, the applied volatility has gone up a lot. Actually, I don't really feel like this is too useful of a graph. But what we want to be doing, we want to be accumulating when the IV is low. It actually looks like it's pretty high. So maybe that's not so useful to adjust. And one thing, before I flip over to the next contract, because that's basically all the data that I wanted to, oh, no, actually, I was going to put in some music, but what I need to do is go over kind of my thesis for AMC and $8, why I think it would be going up to $8. And so that is based on my own analysis. And so I'm just going to flip over to Webull here, and I'm actually going to take a step back, looking at the chart here. And so my thesis is based on, these two gaps here. And I think that we're going to be going up towards this one at $6.85, moving towards $8 a share, which is right here. And so I think that the premium on those contracts will be going up. So that's basically my thesis is, I think we're going to be going towards this gap. And so I'm just going to take a screenshot of this. I'm just going to move this over here, and I will add this to the spreadsheet so we can see that. And let's see. I'm just going to do a quick little screenshot. So we have all of this in the chart, and we can see the price over there. And let's see. Maybe I want to get, all of this data coming down here. Maybe I'll just do this full screenshot. Why not? And that's the daily chart. And so, I'm just going to get that, get it over to the clipboard. And so I can paste it into this. So I'm just going to paste it right here, see what that looks like. And so actually, what I want to do is, because I think it might get, oops, dang it. I screwed that up. This is, live. So live, even though I'll post it later. I screwed up that screenshot, so I got to do it again. But so this is kind of my DD, and I'm going to use this for pretty much all of my AMC thesis. Actually, one of them will be going out further than this, so I'll you have to adjust it for that one. And so, I'm going to paste it up here, so it's kind of in the header there. And then we can see that is, what this is based on. This is based on my analysis. Actually looks, maybe I don't want it like that. Maybe I want to do it like this. And yeah, maybe I'll just do it there so then it scrolls and whatnot. But yeah, that is, let's see, my analysis. I think it's going to be going up to here. And so we'll have to see if that happens. And so I'm actually going to just copy that because it is applicable for the next contract that I'm going to go over, which is, let's see, right here. I'm just going to paste that before I forget. And so this is the AMC $8 call expiring June 20th of 2025. And so this is the one that I first started accumulating. As you can see, I've been accumulating a position. And as of right now, like there are a lot of dots there, but that's just kind of how I format the data. A lot of them are like the same price. And so that's just like moving forward in time. But I'm holding 4 of these contracts, and my average is 54 cents, as you can see here. I just recently bought on, let's see, the 31st, so on Halloween, a buy at 60 cents. I think my next buy is at 52 cents, which was my average, but it just went up because I hadn't bought in a while and I wanted to get more. And so here, looking at this, what we can see, it's the exact same data from what I went over in the previous one. And I keep I'm just doing this on my Saturday night. I feel super lame doing it. I at least got to be listening to some music, but I don't want a copyright strike. So I'm just going to put in my headphones and listen to some music. So just give me 1 second. All right. I got some music that is making me feel good, even though the headphones make me feel a little paranoid. Anyways, claustrophobic, I should say. Anyways, I should have another one of these sips. All right. But so, looking at this, what do I see? Over the past couple months, we've seen the premium coming down. It looks like it's kind of been going up a little bit more recently. And we saw this dip down to 32 cents. I actually had a buy placed at, I think, 49 cents, maybe 48 cents. I'm not sure. And it didn't get filled. So I don't really know what this 32 cent thing is, but it's definitely in the chart and stuff. So yeah, I don't know what that is, but it's there. Maybe that's like a bottom signal. Maybe something nefarious happened with that, and this is going to start to go up. So, I feel like that could be legit, So, yeah. And so this has just been like, me buying here. What we could see here, this data, this is just like not too popular of an expiration. June, it's for the end of the second quarter or first half of 2025. And so, it's just not really that exciting. We don't see like a trend in the volume or in the total premium, whereas with the previous contract, we see a spike there, it's holding up. But, my thesis with this is just the exact same as the other one, that I think that price could be going to, $8 a share. And so this, I do have limit sales placed in like 2x increments. So like, so it's like 54 cents, then whatever's 2x that, then 3x that, then 4x that, my position. And so, this is just like, I'm going to let limit orders fill. If they do fill, take profits, walk away. But yeah, I think that this will be a winning trade. I think that AMC will definitely be at least moving towards $8 a share, like it did over here when there's, I guess you can't see it. I'll just switch over to Webull, actually. Like it did when we had this squeeze in May. I think that price went up violently. I think that could happen again. And so I think that these calls will print, and I think it's pretty reasonable to think that, from like 50 cents, I think they could be going up to like $1, given that, over the past couple months, it's basically been up there, and price hasn't been near 8 as far as the share price goes. So I think this seems like a very solid thesis. I feel very confident in this. And what we can see is that the open interest has been steadily increasing. You see little gaps in the dots. That's just because of the weekend. So, because trading can't occur if the market's not open. But anyways, you just see the open interest increasing. It did drop a little bit over the past week, I guess, but overall, it's just been going up. Just these spikes here in volume. And yeah, total premium, nothing too crazy. Highest is like 10,000. That's a YOLO. That's like somebody on Wall Street Bets. So, nothing too notable there. But, I want to be accumulating this when it's low, not, when it's popular. And so I feel like I'm ahead of the curve on this one. But maybe I'm not. Maybe I'm wrong. But I feel really confident in this, and that's kind of what started, me going through all of this stuff. So, yeah, hopefully that's useful, but I don't really see any signals in the data here other than, maybe this is the bottom. So I feel pretty good about that. And then so the next one is again AMC. This is the $20 call expiring January 16th of 2026, so more than a year from now. And so I just saw this on Unusual Whales. It was a popular contract, and I could see price going up to $20 a share. And so let's go over to the chart so I can add like my DD for why I could see that. And so the reason for that is because we got this gap right here. So let's see, what do we close at here? We closed on August 23rd of 2023 at a price of $19.60, where the cursor is. So I'm just going to put a gap there. It's not filled, so I like to have a dashed line. I like to do my gaps blue for some reason. I don't really know why. But, that's my thesis for this. Let's see, I'll just get it to include all of the data, but not extra data. Yeah, okay, that's good. And so, yeah, that's my thesis with this one, is that there. And actually, I just want to make it a little bit tighter because I don't want to be like, including too much data in this that's unnecessary. But yeah, so that's my thesis right there with this. So I'm just going to take a screenshot of that just like I did before. And so you got all that data there. And so I'm going to save that to the clipboard. I'm on a Mac, so I've got to do that. I kind of actually just recently learned how to do that. But anyways, yeah, so I'll paste that here. That is my DD for this, that I think price could be going up to $20 a share, or at least could be violently moving up. But as you notice, I don't have a position. I do have a buy order placed for this one, and pretty much all of my buys are one contract at a time. I'm a small fish. I'm learning how to do this, so I don't want to be too risky, as I could lose money on all of these. And so this one, let's see. I have a buy at 35 cents. The low from Friday on the 1st was, 36 cents. So, yeah, I think 35 cents, just waiting for it to come down a little bit. It has been lower than it, so maybe I've missed this one. But yeah, that I've just got that order placed. If it doesn't fill, that's fine. And this one, I probably, if it did fill, maybe I'd place an order to sell at a 2x, but maybe not. Cause I think that this could be going up like well higher than a 2x, but maybe not because it's so far out. And, I'm not really too terribly familiar with these. Long dated contracts, but I just think that they're safer bets. So that's why I'm doing them. But anyways, what you can see here is, premiums come down, it's bounced. Maybe I missed the bottom. That's fine. What we can see is the volume spiked up here. Open interest went up, corresponding with that, has pulled back, but we didn't really see too much going on with the volume, so that's kind of interesting. But the open interest has come down, it has gone back up, so that still makes me feel pretty good about it. And also, this one's crazy. We see that spike in the, I checked this to make sure the total premium goes up to, let's see, what is that value? I'll have to scroll to it. That was earlier on in this. Total premium over 800,000. I think, yeah, 818,000. So that's not just somebody on Wall Street Bets. That's somebody who's thinking, and that was placed in September. And let's see what was the date for that? That was on the 11th of September. I feel like I got to say that one, that date in a special way, because who knows. But so looking at this September, that the stock price was hit a high on the day of less than $5 a share. And this is, almost $1 million going long, on that day. So it's not just like retail trickling in, out of nowhere. That's like an execution of a big trade, as far as I would gather, because I mean, like on the 11th here, what was going on here that would, like, why would retail rally into that, and just a bunch of people on Wall Street bets just being crazy, that's like, if this is, if 10,000 is one YOLO, this is 80 YOLOs. No, that wouldn't be all on one day. So like, I feel like this is, a good sign. That was, let's see, the 11th. And so if I look back, what was premium on the 11th? That was, 43 cents. We're lower than that now. So, I feel like this is a good one. And yeah, so, I feel good about this. And yeah, so, yeah, it makes sense to me. And I'm just going to make sure that all these are like lined up. I kind of like to have stuff lined up. And so, yeah, that's AMC. And then I will switch over to the other tickers. I'm just going to have another sip here. And, I might actually have to refill that at some point, so, but yeah, so the next one is FSLY. And so, the DD that I did for this is pretty fun. Actually though, looking at the data, I feel like I'm definitely too early with this. But maybe, I'm ahead of the curve. And so my thesis for this, super fun. I drew this out. I'm just going to pull up the stock chart here. I drew this out during Ticker Request Live, and I also did a video on it, so I should probably include a link to that. And so I should start, though, with FSLY $10 call expiring June 20th, 2025. A lot of these expire June 20th, just because, it's like 8 months from now. It gives me plenty of time, so I feel good about that. But yeah, $10 strike call. And why? And so it's because of this cup and handle pattern. I see, measured move going up to like $10. So let's see. I don't need to, I guess, yeah. Maybe I'll just include it like here. Let's see. Yeah, so this is my DD. Oh, I don't know if I finished saying this, but I drew this out during Ticker Request Live, and, I was contemplating, well, maybe I buy some shares, or maybe I just do a call, and it's like, I'll do a call. And so for this, let's see, I only have one contract, and I think I have a limit sell for 20%. Let's see, yes, I do. But they do have earnings coming up, I believe on the 6th. The date and Webull is all screwed up. And so maybe there'd be some volatility around that. But yeah, this just seems like, beautiful cup, handle, bull flag, whatever. Earnings, I would think that this is going to break to the upside. And so maybe I don't want to have, because I've got 8 months before this expires. Excuse me, the bevy is making me do that. But yeah, I don't know why I have the alert here. I think, yeah, that was kind of like a stop loss at 7:03. But I'm probably not going to worry too much about that because I have enough time. Anyways, I'm going to take the screenshot to add to my little DD. And so we can see that here. And all right. And I've got that copied to the clipboard. And I am going to add that here. So we can see that little cup of coffee right there, steamy cup of coffee. So that's my DD for this one. And yeah, I just have one buy, and actually I should have put that up there. Let's see, why is this? Man, I need to adjust this. Actually, could I do that? Will that screw it up? No, okay, that's good. Yeah, so I should probably do that because, yeah, I need to adjust these in the other ones. So I have this going all the way up here. So it includes that. There we go. All right, and then this for the first, oh, I'm just gonna do that. Put a little $sign there. And so, okay, and this, oh, all right, please forgive me. And I'm just gonna make sure that, yeah, okay, that doesn't include all of that. Okay, so that looks good. And I'm just gonna go there. And so this did that, that's still AMC. All right, so now, you know, Fastly, I'm gonna continue on with this. Sorry about that little hiccup. And so what we can see here, you know, really there's not that much options data. And what I'm kind of curious about is, so like, what we'll see on the 4th, because you know, we had an open interest on Friday of 3, but then we had a volume of 4, you know, so we see volume spiking up. I don't know if that's going to be open interest increasing or decreasing. It might be decreasing. And yeah, I'm not sure, but it would be nice if we see that open interest, you know, goes up to 4 and then, you know, actually goes up even higher still. So we'll have to wait and see about this. But with their earnings coming up, you know, I feel like this is risky because of that. Also with AMC earnings coming up, I think it's risky as well. But, you know, these are long dated calls, so I'm not as concerned about them. And for this one, I don't have any buys placed for it. I'm just holding this one contract. And so with that being said, you know, I'm only risking $89. So maybe I should adjust that, you know, limit sell to be, you know, 2x, 100%. Because, yeah, I mean, I might as well. But, and also, you know, if I say a limit sell that I'm placing or a limit buy or, you know, whatever, take it with a grain of salt, because as things change in the market, I may change those. But that's just, you know, I'm talking about what I have right now, but the market's closed now, so I'm not adapting to it. And yeah, so I mean, I don't really have too much to elaborate on this. I just think that, you know, the chart looks really good. And so I wanted to put some money on that and see what happens. With earnings coming up, though, it's risky. So we will have to see. But yeah, anyways, that is Fastly. And since I am finishing that one, I'm going to take another sip. So cheers, guys. And the next one, it's not my own DD, so it will be, you know, I'll have a link posting to this. And so this is FUBO with a $2 strike, call expiring May 16th. There wasn't one for June 20th, and that's 2025. And so I have, let's see, for FUBO, I have 2 contracts. Let's see. Yeah, so you can see the 2 buys there. I got one at 35 cents, one at 30 cents. So my average is 33. And so I did, you know, add that up. But what I need to do is just like I did before, I need to drag this up to the top there, drag this up to the top. And so that should include, yeah, I think it included it before, but, you know, I just need to have all of that in there. So, you know, it updates when I update the data, the chart updates as well. And so what we can see with this also, you know, not too much data on this. It doesn't go back to the beginning of September. And I think that's just because it's a new contract. And so, you know, hopefully I'm ahead of the curve, but I didn't get the lowest at like, you know, 25 cents. But I did get pretty close to this 30-cent buy. Anyways, what we can see in the volume and open interest, we can see that, you know, the volume's been increasing as well as the open interest. It's a new contract, so that's not really too surprising. So it'd just be nice to see that, you know, open interest is holding up there. And we can see that looking at the total premium on, let's see what day this was, on the 28th, like so right here, you know, we have $22,500 traded on that day total premium. And so, you know, that's a good amount of money, but it's also, you know, why is this not, I've got to update this to include that. Crap. I guess I got to do this for all of them. Man. And so, yeah. Okay. So I need to update all of this crap. Okay, so all of that should be, right. Okay. And so I'm just going to do it for this just so I'm not... Okay, so that's good. That's good. Yeah, I don't know. I guess I just screwed it up with FUBO. Okay, yeah, so all of those are good. So coming back to FUBO, I got this data here, but that's why, we got to be looking at the charts as well as the data. And so we can see these spikes, over 20,000. That's a lot of money, but it's really just like, 2 degens on, Wall Street bets, YOLOing into this. So it's nothing too crazy. It's not hundreds of thousands, it's not a million. So nothing too crazy with that, but I do think it's encouraging that this went up, although I do think that it was mainly bearish premium. So it might have been, whoever got this, the average was 41 cents. Maybe they took a loss, 10-cent loss on those. I'm not really sure. But one thing that I think is like a good lesson with this FUBO one, I was holding this one contract at 35 cents, and I could have sold, I believe, right around, let's see, 30 to 40% profit, but I didn't. I think because, I just feel comfortable with the May expiration, no rush there. But I think that's kind of like a nice example of, why it's nice to take profits on these, whether it's just 20% or, whatever it is, because sometimes it might dip down. There's plenty of time between now and when they expire. Yeah, I mean, I kind of regret not taking a little bit of that profit, 20%, or something, and then buying back down here. But, it is what it is. And, I don't feel too concerned about this. But I guess, let's see, what is my thesis for this one? I should go over that. And this is actually based on the analysis from Mr. Chart Norris on X. So I'm just going to search him, Mr. Chart Norris here, and from his page you can do a little search. And so I am going to search for FUBO and see what comes up. And so this, let's see, this is from October 24th. Let's see, when did I buy? October 18th, so I had seen something before this. But, this is, yeah, let's see. Maybe this is the DD? Yeah, this is the DD. No. 150 will be a gift. I think I kind of put it on my radar. And let's see. Yeah, so October 14th probably corresponds with when I bought. Or, probably put it on my radar shortly after I bought. And so let's see. Yeah, 150 will be a gift. And so, well, if it pulls back, this to me looks like it's a potential, inverse head and shoulders pattern. So it could be going up a lot higher. So I'd say this is probably, my DD. So I'm just going to go back to the post here. And so let's see. I will probably just do a screenshot like this. Okay, I'm not used to screenshotting GIFs. I want to make sure I get him at the right time. And so let's see. All right, I got that. And I'm going to save that to clipboard so I can add it over here. And so, that is my DD, right there. Let's see. Yeah, so I got that, and, 150 will be a gift. So that's basically what put it on my radar. But, kind of like disappointingly, we've seen this crash. I'm not sure if that, let's see, I'm going to pull up the chart here. So this is the chart for the options for the call. And so I'm just going to click over here to see, oh wait, this is FSLY. I meant to do FUBO, sorry. So FUBO over here. Yeah, so I don't know if this negates it or what, but I'm just holding that two contracts, risking $65. So we'll see what happens. I'll see how Mr. Chart Norris follows up with this. But yeah, uh, green eye. Yeah, so that's my DD there, and I need to switch back to here. And, you know, maybe actually I want to format that picture just so it's a little smaller, because it's kind of like, I'll make it half size. And so, yeah, here we can see that it's a little bit more manageable. Yeah, so maybe the thesis has changed, but I've got plenty of time before the May 16th expiration. And, you know, going up to, is it $2? Yeah, $2. That's like getting back up to here. So, yeah, I mean, I think that's pretty reasonable. And, you know, what I should really do is just clean up this chart. I'm just going to delete everything. And so, you know, what I could see here is like, you know, that is basically, you know, the neckline. I'm going to make this a thick purple line for, you know, an inverse head and shoulders potentially with the left shoulder head. Maybe this is the right shoulder forming. And, you know, it's at 150. So he was saying that it'll be a gift. And so we're there right now. So I think that is, you know, supported here. And if this is to be an inverse head and shoulders, left shoulder, head, right shoulder, we can take a measurement to see where that might be going. And so, you know, I'm just going to do it like this. And we can see that would be going to, you know, around above $2. So that is my DD there. And let's see, I'm just going to try to do it like that. Okay, and I'll take a screenshot of this to add to the spreadsheet. All right, so I've got that. Copy that to clipboard. And then I will add that, you know, just to down here, it's like supporting material that, yeah, that I see that measure and move happening, going to above $2. So I'm cool with that. So yeah, finished with FUBO. And so now I will move on to the next one. But, you know, as tradition it requires, cheers, guys. All right. So now I'm going to switch over to Hycroft Mining. This is the $3 strike for the call expiring May 16th. Also did not have a June 20th one available, and that is for 2025, I should note. And so let's see, what do I need to do with this? I need to first make sure that the data is correctly referenced because I kind of screwed that up in the previous ones. Okay, for this, I need to drag my position. Dang it. Keep screwing this up. I feel like, is it Kip from Napoleon Dynamite? You know, dang it. Or, oh, something Napoleon. I haven't seen that movie in a while. Anyways, it'll be a bad reference. So I'm just going to not refer to it. Come on, Napoleon. Ugh. Yeah, that's bad. This is bad. But yeah, 63 cents. You see that, you know, I'm still holding that. And so for Hycroft, let's see. I am holding 4 of these, believe it or not. And, you know, I just bought recently on Halloween, 50 cents. I do have a buy for this one at 45 cents placed. Maybe that's a bad idea. I'm not sure. As you can see, there's not too much data with like the fills and stuff. But you can see my position there, you know, it's kind of fading down. We can see that, you know, volume, it hasn't really been that crazy. Total premium hasn't even been 1 yellow low, so pretty kind of lame there. Open interest has been going up, so looking good in that sense, but it's really, you know, not too many contracts, hundreds, couple hundred, not even a couple hundred. So nothing too crazy there. And so let's see, you know, this is based on my own DD, I believe. I made a video. Ooh, yeah, I've got to add this. So to the FSLY one, I need to add a link to the video that I did for this. And so let's see, I am going to go to my YouTube channel, and I'm going to go to videos, and let's see the video that I did for this one. You know, I want to share that. I'm going to copy the link, which, you know, I think I only need the link up to there. Man, I just, you know, whatever. I'll just copy it and delete it in Excel. And so, yeah, I mean, this is my video. So I should maybe note DGen Ed, and I'll post the link to it there, and I can remove everything after the question mark. If you did not know that, you don't need it. And so that is the link to that video. So that's, you know, more analysis, more support for that. But anyways, coming back to Hycroft mining, also, you know, the same type of thing. Yeah, I've got, let's see, DGen Ed link. So I'll just post it here, DGen Ed, do that. And I am going to find the Hycroft mining video that I did. It's going to have some, yeah, this right here. Okay. Yeah, so this is, you know, $3 or $4, my thesis. And so I'm just going to copy that, and I will put it over here, and yeah, just going to delete that. And yeah, so there's the hyperlink there. I'll go over to the chart as well so we can look at, so this is the call, and I'm just going to click over here to get to that. And, you know, so this is my analysis here. It's a little bit, you know, what I should do is, you know, I've recently did this, started doing this, I suppose, where rather than you just doing a measurement from like a straight line up, what I should do is, you know, do it so the midpoint goes to it, and then I can see, you know, kind of a box rather than just a straight line. And so I think that puts it into a little bit better perspective, because the halfway point is right around where the intersection is with the neckline of this inverse head and shoulders. You know, it seems kind of like we're failing it. We've also filled this gap, so I should fill that line, make it solid. But yeah, and what's this? I'm going to delete that, just there's less clutter. And yeah, I mean, I guess I'll just leave all of that, even though it's a little bit cluttered. But that is my thesis for this one. And you can see $3 right there. So like the measure and move would be putting it higher than it. So it's like, I feel like it's totally reasonable. So yeah, I'm just going to do another screenshot. And, you know, I mean, and it's also quite possible, you know, as you notice, let's see, I'm just going to screen grab this, save it to clipboard. But yeah, as you notice, you know, it's quite possible we're breaking below this level, this yellow line, but maybe we're holding it. So yes, there's some hope there. Anyways, just going to post that there. So I've got that to reference. And yeah, I mean, this, you know, is not screaming at me that this is going up or anything, but with the time, you know, and looking at the chart and stuff, I feel pretty good about this. So, yeah, that's it for that one. And so now I will be, before I move on to the next one, I'm going to crack my neck, sorry about that, and have another sip. And all right. And so the next one, I unfortunately was not able to grab data for this. This is the Lucid $2.50 call expiring June 20th. And so I'll go over my DD for this, and that applies for the next one, which is the $3 strike for the same June 20th of 2025 expiration. There's a ladybug on my ceiling, so I was just looking at that, wondering if it was a spider, but it's just a ladybug. But anyways, Lucid. Let's go over to the Lucid chart, which I've got here. And so I was just noticing, maybe I had an alert, I'm not sure. Maybe I just happened to look at Lucid. That, it's putting in, lows, a new low, 220. It closed at the 52-week low, so not looking so good there. But maybe it's at support. Earnings coming up on the 2nd. Wait, no, on the 7th. So next week. I don't know why these dates are wrong, but yeah, it says up here on the 7th. And so one thing that I could do, which I didn't do before, maybe it's a level, maybe it's not. Let's see, connecting like that. It's not telling me anything useful, so I'm just gonna escape from that. Yeah, I'm just wondering if this is a fake out. I'm wondering if this could start going higher. And so, my thesis was really like, well, I mean, 250 is just right here. That seems like a safer bet. I think it would have been, let's see, excuse me. Looking at, yeah, it would have been, about 50 cents to get a fill. I had an order placed for 50 cents on Friday. It did not fill. I'm kind of happy about that because I think actually $3 is a more solid thesis. And let's see, yeah. So I'm just gonna get this all here. And so this is basically my DD. We've got this pivot low over here, right around 250. I think we could be bouncing up to that be a resistance. And so, take profits if I get an order filled. I don't have any Lucid shares or contracts or anything. But yeah, I mean, I could see that bouncing and getting up to there. But also there's this gap up here, right around $3 a share. And so, I think that's pretty reasonable too. So that one I'm actually more interested in. I do have an order placed for that one rather than the 250 strike. But I'm just going to take a screenshot here to serve as, my DD. Oops. I know this is the daily because that's what I usually look at. So I don't need this other information at the bottom. Got that in the clipboard. And so, yeah, this one, I'm not really interested in this contract because of the lack of data on it. And I think, really want to be using the data to inform decisions on this stuff. And so rather than looking at the $2.50 call, I'm going to be looking at this one. The reason why I was able to get this data, which was after my Unusual Whales subscription had expired, is because this one has, more volume, more activity on it. And so Unusual Whales gave, like the past week effectively of data. And so I just kind of extracted that. And if I'm still able to get data from Unusual Whales for these, I will. But yeah, for now, I don't. And let's see. I'm just, yeah, this one doesn't really matter. So yeah, this is the one that is of more interest because I've got data for it and actually, makes sense. And like a 40-cent fill, that's what I have my limit buy placed at for one contract. That seems, pretty reasonable. And, we could see that just for the limited data that I have, the premium's been coming down. Low over here is 40 for the y-axis there. But the, lowest fill was 36 cents. On the first, and whereas the average was like 41, that's what you see over here. We also see the spike in volume, but not insane or anything. 800 contracts, 44, $1,000. So that's like 4 YOLOs, so nothing too crazy. Yeah, 44,000 you can see there. Yeah, so I'm actually, I think this is kind of a nice chart to have, but it's also not really that useful. But yeah, I mean, I might as well include it. And yeah, so, and from that, we see the spike in volume and open interest increases and hopefully it stays up. And so that's what I want to be seeing with this. And let's see, I guess I'm just going to click on all the data to make sure that I am referencing everything, in its entirety rather than just a portion of it. Yeah, okay, so that looks good. And so, yeah, I do not have a position in this one, but hopefully I will. And, this is also, kind of a gamble because, earnings are coming up. But I feel like this is, oversold. And so I think it could be bouncing. There's a gap up there. There's this level here. I mean, 229, though, that could be acting as resistance, this prior pivot low. So also that to think about. But yeah, I mean, I don't know. I'm just trying to get, more into options and stuff. And this one just seems intriguing. Risking $40 to start, so nothing too crazy. Yeah, and so before I go on to the next one, which is one that I'm like really excited about, NIO, I'm just gonna have another sip. So cheers, guys! Again, happy Saturday. But yeah, so going on to the next one here, looking at the NIO $8 strike call expiring June 20th. I'm really excited about this one. This is one that I have been accumulating as of right now. I personally am holding 6 contracts, which I find hard to believe. My average is 73 cents. So I put a good amount of money on this, but I feel pretty confident in my analysis in it. And I do have another buy placed for 55 cents, so we'll see if that gets filled. And for this one, I plan on doing a 100% swing. Same with Hycroft. But like FUBO and the other ones were more or less 20%, other than the AMC June 20th. That's for 100% increments up, as I believe I had gone over. But anyways, for NEO, this one is just for a 100% swing. My average is 73 cents. And, let's see, that's like $100.46. And, in the past, 2 months, less than 2 months, we've been up there. So, I feel like it could be going back up there. I'm not really sure. And also, what we do see here with the volume, we see the spike going up to 4,000 contracts. That is total premium traded on that day, which was, let's see, what date was that? That was on October 17th. Total premium traded over $250,000. So I feel, that's a lot of money right there. It's more than a YOLO. It's more money than I have. So I feel, pretty confident in that. And also, following that spike, it has sustained. And so that was October 17th, as I had said. And so we can see, let's see, October 17th. Is that over here? That's over here. That's at the low here. That's when there was that spike in the volume. And so, yeah, premium is lower than that, but it's, sustained up here, the open interest. So, I feel good about that. And, yeah. And so, let's see. This is really my DD is 2 DGen Ed videos. So, I'll do this here. And so we'll just go over to the channel to find those. And so let's see, what are my DGen Ed videos? Oh, yep. Okay, so this is the initial one. Yeah, that's the initial one that I did. Just going to copy that link so I can post it here. And that was a really popular video. Thank you if you watched that. I'm really proud of that one. And a more recent one, just did a follow-up. This was not as popular. It's if a video for me gets 1,000 views, that's a lot. I appreciate everybody who, watches my stuff. A lot of it's just for fun. It's pretty much all just for fun. Yeah, so those 2 videos, this one, that one being the more, the top one. Let's see. And so if I go over to the NEO chart here, we can see, my analysis is, let's see. Yeah, my analysis is massive inverse head and shoulders. Maybe we're breaking this. Maybe it takes some time, but $8, that's nothing crazy. And if I switch this over to the, let's see, the log chart, we can see this. I think I got to switch over to the weekly. But yeah, there's this massive downtrend, the red line, and that would be right around $8. So yeah, that goes back to the highs that we were hitting in 2021, at the beginning of 2021, when price was around, over $60 a share, hit a high of $66.99. So yeah, that's just crazy. But then if I do switch this over, you can see it, if I switch over to linear, that line's not as useful. But yeah, so, my analysis is really just, let's see, going to do the same type of thing I did before. So from the low here, lining that up with the neckline, that will be putting price right around or above, $8 a share. So I feel good about that. Even if it bleeds, I'll just continue to accumulate. And, I'm proud of my analysis. Even if it's not always right, I work really hard at it and I try to learn. And yes, I mean, I just feel good about this. That's why I've been accumulating the calls, because, I just feel like I got to have some confidence. And also the thing I like about options is that they have dates corresponding with them. So it's not just like I'm going to hold shares forever. It's like, I have a plan to get out. And so like that's my analysis there. I feel good about this one. And yeah, like I said, I've got 6 contracts and I have a buy 55 cents. So maybe I have 7 contracts. It's a lot. I'm not a big fish. And so having more than one contract of anything is a lot for me. But yeah, I mean, I feel good about this. And I'm just going to make sure all the data is correct. I might have already done this. But yeah. Nope, this one's not correct. Okay, so my buys, I need to bring this up here. Up here. I didn't. There we go. Okay, cool. So there's that. And so that's everything. Okay, cool. So yeah, that's Neo. This one and the AMC one, I feel most confident about. Yeah, but I'll move on to the next one in just a second. But as tradition requires, cheers. All right. So the next one on the list here is the plug $3 call expiring June 20th of 2025. And so this one, let's see, I have 3 contracts at an average of 41 cents. I do have a buy place for another contract at 35 cents, and I'm planning on swinging this for 100%, but maybe that's going to change, who knows. And so what we can see is that, premiums have been going up. So maybe I've been on the wrong side of this. I've been, got some here accumulated. I'm like adding more as it comes down. The volume doesn't really tell me that much. The open interest is going up, so that makes me feel good about that. The total premium, nothing too crazy. Highest is less than 7,000, so not even one YOLO. So no big deal there. And this one, let's see, I think this is, it's at least, let's see, it's at least one video. It's really like all of my plug videos. Well, I have to give credit to somebody. I think maybe it's Vaz. I'm not sure. It was a video of this, that, yeah. I don't need any more than that thumbnail, That is exactly what I'm looking for. So DGen Ed, there's the first one. Just going to delete all this crap after the question mark. And, I'll just include like all of my videos on it. And so, yeah, because I did this like bear flag video. And it's like, oh, wait, like somebody pointed this out. I think his name is Vaz. And like, yeah, this one actually got more views. But then I said, no, period, inverse head and shoulders. And so this here, only 74 views. And then what was my, let's see. Where is it? Where are the other ones? I think this Neo one was pretty popular too. Anyways, plug. Come on, do something. Yeah, here's another one. Let's see. Okay, and so there. And then this is my most recent one from 7 days ago. Yeah, and I'm probably going to take a break from making them because I don't feel like I have anything new to share. And so, yeah, there's that video. And why aren't they? Oh, this is why they're not hyperlinks. Okay. There we go. All right, and okay, so there's some links there, and yeah, I mean, I'm just actually just going to include a screenshot. Next, no, I should include something from the chart. So over here, looking at the chart, and so for this, you know, I would see this as being from there, going straight up to that neckline, and price going up to around $3 a share. So pretty straightforward there. And there's a gap fill. I mean, there's so many things here telling me that it's going higher. So I feel pretty good about this. But, you know, I could always be wrong too. All right. Oh, man. Some of them I might include too much of the screen. I have like a dual monitor. All right, let's see. So I'm going to add that. All right, cool. Yeah, so I mean, that's like my DD for that. I feel good about this. I feel good about pretty much all of these. Yeah, and I've just got like 3 more contracts to go over. But, you know, before I get on to the next one, cheers. I don't know if I'm going to make it. Yeah, so I will go on to the next one, which is Rivian. This is a $15 call expiring June 20th. And yeah, I do have 1 contract. I do not have a buy because this is a little more pricey than I like to go with contracts and stuff. And let's see, you know, my average is $1.30, as you can see there. I don't have a buy for another one. I do plan on doing this for a 100% swing, but maybe that will change. What we can see here is the premium has been coming down. It's a little bit lower than my average, but that's fine. Don't have too much, you know, to go off of with the data here. The open interest has been declining, so that's a little worrisome. And I should, you know, make sure that all this data is correctly referencing the right number of stuff. I'm pretty sure that my stuff will not be. So yeah, I've got to drag this up here, drag this up here, and then I can copy this, paste it, and so yeah, that's my position. And yeah, what's my analysis on this based on? This is also, you know, I've been following Rivian. I've been accumulating shares because I like the company and it's been pulling back. But I haven't really done any analysis on it other than, you know, like, let's see. Like, I don't know where the bottom could be, you know, and this is just kind of like hopium that this red line, this trend line, you know, be acting as support. But I mean, that's something. Earnings coming up on like the 7th, lots of earnings right now. But anyways, my analysis is really just based on, let's see, Mr. Chart Norris. And so I'm going to go here to search for Rivian. And October 17th, when did I buy my contract? October 29th. So, you know, it says like, he just reposted this. Maybe this is what it was. But yeah, I mean, his analysis is always pretty clean. October 28th. Gosh, I keep switching to the wrong one. October 29th. Yeah, so this, dang it. This is probably what I saw. Rivian bigger picture. Ooh, and I gotta like that. Yeah, so this is like my DD for that. Oh, and for these tweets, I should probably include links to them. So it's not just a screenshot, but also a link. I'm not sure if I did that before. And this picture format, it's like, make this like 3. Wait, 3, not 6. There we go. I don't know, it's kind of small, but whatever. That's kind of my analysis. And let's see. Copy a link to that. Going to the wrong place. So there's that. Match destination format. There you go. And make that a hyperlink there. Yeah, I mean, do I want to include more? I keep going back to the wrong thing. Yeah, so 4-hour chart update 0.1. Yeah, I'll like this, and I'll include a link to this one as well. Oops. A screenshot of it. And so let's check that out. Let's make this like 4, so it's a little bit smaller. And I'll include a link to that here. Copy link. Match destination format and return that. So it's a link. Cool. Yes, that's basically my analysis for this one. I do have some of my own analysis, but mine did not really include like a move, whereas his includes a move. So yeah, I mean, I feel, I don't know, that's hefty for one contract for me, but yeah, I'll take it. And yeah, so the next one that I'm gonna get into, before I do that, I'll have another sip. Cheers to you guys. I got one more sip left in there, so it's perfect. Yeah, so this next one is SSYS, $10 call expiring June 20th. This one's pretty obscure. I don't really like how limited data there is on it, so I kind of regret getting into this one. I think it might be a bad one to have gotten into, but I think that there are some things that do stand out. And so one of the things, I do have it up here, this was kind of like mentioned in one of Gareth Soloway's videos, where it's just this, analysis, which I'll include my own line and a level that I think it could be going to. But yeah, he just mentioned this in one of his game plans, and I was just like, well, I might as well just buy a call because I could see it going up to 10. But yeah, there's some things maybe a little bit concerning about it, but maybe also not. So yeah, I mean, I don't know. So I'm just gonna include this Gareth Soloway, so I know it's a link to his channel, and there's that. Delete all the crap after the question mark. And there we go. All right. And let's see. I did some of my own analysis on it as well. So we can take a look at that. And my analysis really just like I drew the same line that he had drawn. So, I ripped him off. What can I say? But, I'm including a link to, his video and stuff for him earnings coming up on, it looks like the 13th. I don't know. So maybe this breaks out then, maybe it doesn't. It's still in a, it was below a downtrend. Now it's above a downtrend. I don't know. But I mean, I got until June, so I'm not too worried about it. But yeah, this one's just dumb. Oh, and I should mention that, I'm just going to go back to the spreadsheet. I have 3 contracts. My average is 57 cents. I do have a buy place for 35 cents. I plan on swinging this for less than 10% just because I don't feel so great about it, just because there's not that much data on it. I feel a little not so great about it. But, maybe I'm just ahead of the curve. That's always a possibility. And so, my strike, let's see, $10. Why $10? We can see, high right around here. Also, consolidation here. Also, the lows over here. So let's see, what are the lows from over here? 995. Okay, so I can draw something right around there. So let's see. That 1013. I make this line thicker, and I'll make it, I don't know, red. That's like target. I don't know. But yeah, so that's kind of like my analysis with it. I think it's pretty reasonable. And so, yeah, I'm just going to take a screenshot of that to add to my DD. And yep, so there's just a screenshot there. Copy that to my clipboard. And I'm just going to post that there. And so that's, where that's coming from. And yeah, so I feel like, I feel like it's totally legit. It could be going up to 10, but as far as like the options go, you got to have buyers. And I got into this position because when Gareth put out that video on the 28th, comes out right before the market opens, I was like, oh, well, premium, the buy for it was like 90 cents. And so I was like, well, I'll just place the limit buy at that, see what happens. And, I got filled at 75 cents, but I could have gotten filled at 50 cents. So, my average is like not notably above 50 cents, but it could be lower. Because for this day, I bought one contract at 50 cents, one at 45 cents. So, I could have done better with it. And so with that being said, yeah, there's just not enough action going on. I'd be worried that there wouldn't be buyers if I wanted to sell. But maybe I regret that with earnings, but yeah, nobody ever lost money. Nobody ever went broke taking profit. And so even if I make less than 10% on it, I'm like, because like right now I'm risking, 3 times $57, on what stock? I don't even know what this company is. It was really just like Gareth's analysis. And then it's like, well, I see that in the chart as well. So, I'll go with it. And yeah, but I don't want to like be holding it forever. So let's see. And I need to update the numbers here. So I'm just going to do that real quick. I'm trying to do this like in a way that I can just like update this on a weekly basis with these empty spaces and, not worry about it too much. So yeah, because I'm going to be manually entering these numbers every single day. But I'm doing it to save a little bit of money or something. Yeah, that's effectively it. And also just to, filter out, the data that I have access to so I can learn better. And yeah, so there is that. I'm just going to save that. I haven't been saving this as I've been updating it. And so I've got one more to go over. So I'm going to take my last little sip. I didn't really think I'd get through all this. It's been really enjoyable. Thank you all for hanging out. I've got one more ticker to go over, but one last sip here. I'll drink water at the end, I guess. All right. So now let's get into it. The last one is Unity Software, ticker symbol U, with a $45 strike expiring January 17th of 2025. So this one's totally risky. I do have a position in this. I have 9 contracts at an average of 11 cents. I have no more buys because I'm cutting myself off from buying because the expiration is just too close, and I don't necessarily think it's going to go up to $45 by then. And so the reason why I'm holding this is, I don't know, there should be some negatives. I did make some money with this contract, and I was contemplating, getting completely out, but I held, I think, one contract, and then I've just been like accumulating as it's gone down. And yeah, so let's see, how many buys? 1, 2, 3, 4, 5. So I held one contract. I should have just gotten out. It was just too close to expiration, but I was just like, well, why not? And so what you can see here, there's a big spike in the average fills. And basically from the top there, I have been, accumulating on the way down here. This was on the 15th. So the 15th is, when I got out, as you can see there. I should have just stayed out because that was the exit opportunity. But, I could see this going up to 11 cents. This is in 5-cent increments here. So I don't think that's too crazy. We just need to see like a spike in volatility. And so what we can see here, volume spiked up here, and it's also stayed up. So that is nice as far as the open interest goes. So yeah, I feel kind of good about that. We can see the premium here, over $250,000 traded here, over 100. So that's like 10 degens from Wall Street Bet. So that's not unreasonable, but that's a lot. And so, but also people lose money. People with a lot of money also lose money. So I can't factor that out of the picture. And so my analysis with this, man, this is like, I'm very proud of this analysis. I think I got 2 videos at least. I haven't done, actually, I think I got 3. And so, yeah, I'm going to go all the way back. So let's see, to my videos. So over here, I got one that's like purple. Maybe I want to actually, yeah, so this is really like, crack my neck, sorry. I have one that's like a purple thumbnail. This is one that I think, only 218 views, man. I was spot on with that. But I had one going back that's like a purple thumbnail. So let's scroll to that. Unity software. Let's see. I stole that thumbnail for the other ones. Unity in dip buy zone. Yeah, so this is one that like I'm really proud of, as I am with like pretty much all of my videos. But yeah, this is like the one that started it all, I believe. And only 176 views. I'm not sure. Let's see. Playlists. I think I'm going to have, yeah. I just want to view full playlist. Okay, yes, that's the one that started it all. And then, yeah, these other 2. So I actually don't need to look at the playlists. I can just look at the videos, and then I'm just going to scroll back to that one and then start adding. Yeah, so this one here, this one was like spot on, man. Like so spot on. Although it like didn't go exactly to my level, so I wasn't able to get a fill, but it would have been just like for a very small position, so like no big deal. Yes, the next one, same graphic basically, only 86 views. And I had called like the 10% drop, drop in 10%, up 15%, up 30%. I was like spot on. So it's like some analysis I'm really proud of. Not all of them are the greatest, but this one was just like really good, really clear. And yeah, and then I'll just include the chart over here. And yeah, I've got this all mapped out. All right, I'm just going to make sure that it's okay. There we go. Yeah, so need a screenshot of that. Yeah, 45. It's like right there, but not in this time frame. So I want to get out. This one, I have a limit sell at 11 cents. So be break even. However, like with fees and stuff, it's not exactly break even. I'd be losing a little bit of money, but that's fine. It's the price of trading. Sometimes, it's not worth the risk. And, yeah, so like this one, I feel like I could lose money, and the SYSS or the SSYS, I think I could lose money. But, I do need to select all of this data to make sure that looks good. I've got all of it there. This one is not going to be. Let's see. Okay, there. And then this, I need to include that. Is it T? Yeah, there we go. Cool, shortcut to get that $sign from that 9. Yeah, so it's 11 cents, you know, currently around like 8, 9, but I've been like adding at like, you know, 10, like, so it's basically been like, you know, 10, then 9, then here 9, 8, then 10, 9, 8. You know, I'm just like repeating myself. My average is 11 cents. If it's not going to spike up to 11 cents, you know, I'll, you know, lose whatever. It's like 9 times 11. It's $99. That's what I'm risking. I'm risking less than $100 on this, and I already made some money with it. Not $100, but I made some. So yeah, I mean, this could be a bad trade. The other ones could be bad trades. A lot of them could be, all of them could be bad trades. So I don't really know. But yeah, anyways, I mean, I'm actually going to turn off this music that I got in my ears just to wrap this up. And, you know, just say that, like, if you guys did enjoy this, you know, please let me know. I will add timestamps over an hour and a half long of a video. Future ones will probably be shorter. But, you know, this is just, like, really useful for me, putting this data together, and not just, like, putting it together and having there, but putting it together, thinking about it, talking about it, sharing it with you guys. And so hopefully it's helpful, whether you're interested in these tickers or not. You know, this channel is about learning, and that is to say learning from mistakes as well as successes. And so with this, I'm sure there will be a number of mistakes, but hopefully there will be some successes. And if those successes lead to, you know, 100% swings, you know, I think that this list here is going to be a profitable list. Even if there are some losers, I feel confident in at least, let's say, half of them. And yeah, so thank you all so much for hanging out. I hope that you enjoyed. And, you know, I'm just going to cheers with some water now. And I will throw up, as usual, if you're new to the channel, you know, make sure you like and subscribe. If you're not new to the channel and you enjoy this kind of content, let me know in the comments. Make sure you like it, share, all of that. It's so fun learning with you guys, whether that's in the comments, whether that's during Ticker Request Live on Sundays. I've been a little burnt out lately, but it's really just like, you know, I don't necessarily just want to make videos for views. I want to make videos that, you know, I look back upon and am proud of, like I am with the Unity software ones, like I am with some of the Neo ones, the plug ones, Rivian ones. There's one that I nailed. Yeah, and so I hope that this is useful for you guys. It's useful for me. And yeah, I mean, I hope that retail is able to get an edge. And hopefully this can be a part of that for you. I think it will be for me. And, you know, I look forward to sharing, you know, an update on this next week. Maybe I'll share some screenshots if I do exit some of these positions. For members, I tend to share, you know, options that positions that I do open. So I'll probably share some of these with members, 99 cents a month to join if you like. But anyways, enough rambling. Thank you so much for hanging out. Take care, you guys, and good luck trading in the new month of November into the close of the year. I think it's going to be a really good close of the year, so I'm really excited about it. But anyways, take care, you guys. Thanks a lot for watching. Cheers.